Hello, traders, and welcome to the Market Open Preview brought to you through FXCL, FXCL Excellence in Trading. Traders, today is May 27th on a Tuesday, 2014, and what a great day it is to be with you today. Traders, we start our week one day later than last week due to the holiday yesterday in the UK and the United States. Traders, it is great to be with you. Please let me give you an introduction of myself. My name is William Gilday. I will be your moderator today through the course of this educational video. Traders, I've been trading from 2006, and in 2008 I retired from a wonderful career in the fire rescue department in Palm Beach County, Florida. And 9 days after I retired, traders, I moved on the big bird and came to Thailand on a vacation. And traders, it's 2014 and I am still here. Traders, my name is William Gilday, and it is great to be with you today, and I'm just really excited for another opportunity to go over some charts and some news data that's coming out today. We have one big one, I think, that's going to rock the markets. So why don't we get over to the news, but before we do that, let us move and talk about our risk disclaimer. Traders, remember, Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Traders, don't trade with money you cannot afford to lose. Traders, if you're trading your expense money, mortgage money, or rent money, please sit back, take a deep breath, and think about what you're doing, and possibly open up a demo account and trade on a demo account until you can trade the live markets comfortably in your financial situation. Traders, you can always go to www.fxclearing.com and join us to get that demo account. Traders, let's get over to the news. It is the 27th of May on a Tuesday. Overcast skies today in Pattaya, Thailand. Things are calming down since last week's news over here. So let us talk about some news. We have, in the U.S. session, we have core durable goods orders month on month. That is a high impact data. Traders, I am thinking that that is going to be a positive number. The U.S. is really putting out some good numbers lately, and I think that will be a absolutely good number. The biggest news event today is later in the New York session. We have ECB President Draghi speaking, and I think there's a very good possibility at the New York Open or the London lunch, markets could go flat waiting for him to speak. We know that he's been talking last month about printing money and trying to put some stimulus into the economy in the Eurozone. So I'm sure the financial markets are going to be watching to see if he continues on that track and wants to print money and say what he said last month. Remember, last month he moved the markets for almost 2 weeks in a drastic sell-off of the euro. All right, traders, what do you think? Let's get to the charts. All right, first one we're going to talk about, we talked about last week also, is the pound yen. Traders, this is called the beast. And the reason it's called the beast, it's a very volatile pair. Please, before you trade this live in the market, make sure you understand the pair and understand its personality. And yes, traders, currency pairs do have personality. So this currency pair is bullish. The pound is a lot stronger than the Japanese yen, so it is bullish. However, on this daily chart, we are in a range, traders. We are in a 146 pip range, which is nice. So we do have a lot of movement here, and we can move all over the place. However, it is bullish, so you would want to be at the bottom of the range, which would be support, and take it up to resistance, which would be the top of the range. So on that note, I am biased to the bullish side in this currency pair. Traders, let's go over to the 1 hour chart. Traders, this is the pound yen 1 hour chart. A lot on this chart. Let's just take a look real quick. I did a fib on this chart, and I'm looking for price to give us a pullback to about that 50% fib. And let's see what happens there. And that's at 171.60. And we could take that to the long side, and we want to go to the 161.8 fib, and that's at 172.39. For our take profit area, you can see my stop is below that green line, which is a 200 exponential moving average. And that's where our stop needs to be. Yeah, it's a little bit big for the stop, but we are within a 1-to-1 risk to reward ratio. Not that that's detrimental that you have to be a 1-to-1. It just is more comfortable if you can trade comfortably with that 1-to-1 ratio. If you're not exactly a 1-to-1, trade management, if the trade's going against you, get the heck out of it. All money management skills have to come into play here. All right, traders, let's go over to the 15-minute chart, and this is a much easier trade plan on the 15-minute chart. However, look at your MACD, very strong histogram above the zero line, and you can see the Williams percent R indicator is above the -20 line and is pointing to the upside. So this is extremely bullish here on the 15-minute chart. Traders, I would look for this to give us a pullback. We need a pullback here. I really don't want to be buying at resistance. So I'd like to see this pullback as close as we can to the 200 exponential moving average, which is at 171.60, say, and we'd like to see that come back as close as we can. The stop has to be below the 200 exponential moving average. We have no choice in that. No matter where you're going to take the trade, the stop's got to be below the 200 exponential moving average. Why do I say that? Because we know in Forex, price action magnets to that 200 exponential moving average. Take a look at your financial channels on TV, and you can see one indicator they always have on their charts is the 200 exponential moving average. There's a reason for that, because price reacts to that price level. All right, so that's what we're looking at with the pound yen. We got some good trading opportunities here. I think it could work out well. We might have to wait till the second part of the morning of London to get our trade set up. We might need the London Open to give us that pullback. The problem with the pound is it doesn't give you a pullback often. So this just might take off from this area and go without us. And if that's what happens, that's what happens. But we need some sort of a pullback before we can get in that. The only option is you can let this go, then get a pullback to this area, which would then be support, and then you would, of course, be buying at support. Remember, we want to buy at support and sell at resistance. All right, traders, let's go over to the Euro New Zealand. Yes, this is a bearish daily chart. You can see where the 200 exponential moving average is quite a bit away from price. Price is at 59.25, and this is at 62.30, where the 200 exponential moving average is. So this is a bearish move here, but you can see for the last 5 days, traders, this has been in a range. Not much going on here. Take a look at your MACD. It's really not the indicator you want to be looking at, because we've been in a range on this chart for the last 6 days. Take a look at your Williams percent R indicator on the bottom of the chart. It's right at the -20 area, so we'll just keep an eye on that. However, if you look at this chart and you extend it out, it is bearish. So let's go take a look at the 1-hour chart, traders, and look at trading opportunities. Traders, we have 2 trade setups on this 1-hour chart on the Euro New Zealand. Take a look at where our 200 exponential moving average is right now. That's that green line on my chart. So we're looking for this to pull back. We like where price is right now. However, we can't take a trade above the 200 exponential moving average. So we would need a close below the 200 exponential moving average and then take that trade to the downside, placing your stop above the 200 exponential moving average. The better trade is, let's take this and let it go above that trend line, basically where that stop is, to the trend line, and then take the short trade. That would be nicer. The closer we get to the stop, the better the drawdown is, and we don't have a lot of risk on the table. Take a look at our profit area. Our take profit area is at 5,900. At psychological level, you know you're going to get a bounce there. So no matter what your trade situation is, you want to make sure you're out of that trade by that time. Whether you take it from the 200 exponential moving average or you take the trade from the trend line, both of them are valid, and I think they're both great trade setups. Okay, let's take a look at the 15-minute chart, traders, see what we have. Traders, we have another very nice setup here on the 15-minute chart. Traders, the 200 exponential moving average is at 1.5950. We'd love to see price right where it's at. Give us a bearish candlestick formation and we can take this down. The issue is, traders, this broadcast is being recorded 8 candles before the London Open. So a lot can be happening in that time. The only nice thing is that we're in the inactive zone, so hopefully we do not get any interruptions with that. We basically want this where it's at, give us a bearish candlestick formation, and we're going to take this down to 59.12. You know, at 5,900, you're going to get a bounce, so you might want to pop out of the trade maybe before that 5,900 area. So the 59.12 is very good. It's a good place to take profit. We don't want to take this down to 5,900. You're going to get a bounce, and you can really get smacked around there and lose all your profits, or scale out and continue to the bearish trend. So traders, that is the Euro New Zealand on the 15-minute chart. I think we have some nice trade setups today. I think this is going to work out very nice. Hopefully the market doesn't fizzle out as we get closer to Draghi's speech, ECB president, and we can take these trades for the long haul for today's intraday trading. Traders, on behalf of FXCL Excellence in Trading, I'd like to thank you so much for being with me today. And traders, have a great trading day. And remember, trade safe and trade smart. Take care, traders, and bye-bye.